Guys, it's great to see you both. Lizanne, I'll just read what Deutsche wrote. If Fed wants to put 100 basis points in play, they're going to have ample opportunity. We're going to get Waller, Bullard on Friday. If they don't float and back the idea, it would seem unlikely they want to do it in July. What do you think?
Well, I also think it's a function of what the market starts pricing in between now and the FOMC meeting, which is still 2 weeks away. And I think if the market gets more aggressive, it's pricing in 85 basis points, which points to about, 35-40% chance of 100. But if that continues to move up, then there's probably greater comfort on the Fed either using their rhetoric, whispering it out through one of their speakers, or, I don't know, maybe, dropping it to a certain Wall Street Journal reporter.
Yes, that's often how it works these days. Mark, I wonder, what did you find most, I guess disappointing is the word, in the print? Is it about core annualized near 9? Is it no relief in apparel? Was it the degree to which transportation hit us? Talk about some of the internals.
Well, I think the thing that surprised me the most was vehicle prices. I mean, as you know, Carl, they've gone skyward because of the supply chain disruptions and the lack of vehicle production, the collapse of inventories on dealer lots, both new and used. But in recent months, and particularly last month, used vehicle prices have fallen sharply. So if you go look at auction prices, where used vehicles are sold, they're down a lot. So I was surprised to see another big increase in vehicle prices during the month. I suspect that's measurement, that probably seasonal adjustment. I think that's going to come out of the day. The reality is used vehicle prices are falling and new vehicle prices will come in. And, focusing on one thing sounds a little weird, but that's been a big contributor to inflation over the past year. So if you get that to simply stop rising and coming in, that'll have a big impact on core underlying inflation. So that was the biggest surprise to me, and why the number came in even a bit hotter than I had anticipated.
Right. Lizanne, it's such a huge dynamic now for the market. Does it take some of the oxygen out of the room for earnings? I mean, are we going to care less about forward guidance when we're so obsessed with inflation?
So I think this is going to be a tricky earnings season, even if today's CPI print was a bit softer. I think this may be the first quarter in 7 or 8 where the bar is set too high. And ex-energy, we're in negative territory for year over year, but I think that's even too high. I think this report now really puts pressure on companies to speak very bluntly about profit margins. That's not something that they usually express on an ongoing basis to the analyst community, and that's why there aren't consensus estimates like there are for earnings. But I think that is going to be the big discussion point during conference calls, not just the impact on profit margins, but what their plans are for labor. We had the better than expected jobs report, but I think under the surface, especially a decline in household employment, which leads payroll employment at inflection points, I think the analyst community is going to be more demanding for details on margins and labor.